Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2024, and we're diving into the third quarter earnings report of Wintrust Financial. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Wintrust Financial's latest performance.
Wintrust Financial has just released their Q3 2024 earnings report. Can you give us a brief overview of the company and the highlights from this report?
Absolutely. Wintrust Financial is a financial holding company with a strong presence in community banking, specialty finance, and wealth management. For the third quarter of 2024, they reported a net income of $170 million, or $2.47 per diluted share, which is an increase from the previous quarter. The company also saw significant growth in loans and deposits, partly due to their recent acquisition of Macatawa Bank.
Revenue and profitability overview. Let's start with the top line. Wintrust Financial reported a net revenue of $615.7 million for the third quarter. How does this compare to their previous performance?
Wintrust's net revenue increased by 4% from the second quarter of 2024, driven by a 7% rise in net interest income, which reached $502.6 million. This growth is largely attributed to the expansion of their average earning assets, including the integration of Macatawa Bank.
And what about their profitability metrics?
The company achieved a net income of $170 million, up from $152.4 million in the previous quarter. Their earnings per share also rose to $2.47, reflecting a 6% increase. This improvement in profitability is a result of both organic growth and strategic acquisitions.
Operational efficiencies and future outlook. John, can you elaborate on Wintrust's operational efficiencies and their future outlook as stated by the CEO?
Certainly. Wintrust maintained a stable net interest margin of 3.49%, despite a slight decrease from the previous quarter. They reported a substantial increase in loans and deposits, with loans growing by $2.4 billion and deposits by $3.4 billion. CEO Timothy Crane expressed confidence in the company's ability to sustain strong financial performance, emphasizing their focus on net interest income growth and disciplined expense management.
What are the key factors contributing to this positive outlook?
The integration of Macatawa Bank has been seamless, providing Wintrust with a quality core deposit franchise and excess liquidity. This acquisition, along with their strategic focus on credit quality and operational efficiencies, positions them well for continued growth into 2025.
Strategic initiatives and market expansion. Wintrust's acquisition of Macatawa Bank is a significant strategic move. How does this fit into their broader market expansion strategy?
The acquisition of Macatawa Bank allows Wintrust to expand into the desirable West Michigan market. This move is aligned with their strategy to grow their footprint in key regions. The acquisition added $2.9 billion in assets and $2.3 billion in deposits, and the company recorded $144.6 million in goodwill from this transaction.
How has the integration process been so far?
According to CEO Timothy Crane, the integration has been smooth, and they are thrilled with the progress. The acquisition not only enhances their market presence, but also brings a compatible management team and a reputable brand into the Wintrust family.
Risk management and credit quality. Risk management is crucial for any financial institution. How is Wintrust managing its credit quality and associated risks?
Wintrust has maintained stable credit metrics with a provision for credit losses of $22.3 million in the third quarter. Net charge-offs were $26.7 million, a decrease from the previous quarter. Non-performing loans accounted for 0.38% of total loans, indicating a stable credit environment. The company continues to be conservative and proactive in reviewing credit and maintaining strong credit standards.
What does this mean for their risk management strategy?
It means that Wintrust is well prepared to handle potential credit risks. Their conservative approach and strong credit standards ensure that they have appropriate reserves to cover expected credit losses, which is vital for their long-term stability and growth.
Key takeaways. In summary, Wintrust Financial has delivered a strong performance in the third quarter of 2024, with significant growth in both loans and deposits. Their strategic acquisition of Macatawa Bank and focus on operational efficiencies have positioned them well for future growth. John, any final thoughts on their investment prospects?
Wintrust's solid financial performance, strategic market expansion, and strong risk management make it an attractive investment opportunity. Their ability to integrate acquisitions seamlessly and maintain stable credit quality further enhances their growth potential.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Wintrust Financial's performance in the comments below.